Hello and welcome to Views from the Market, Midmarket Private Equity and M&A in Canada. My name is Mario Nigro, and I'm a partner in the Private Equity and M&A group at Stikeman, Elliott. For today's podcast, I'd like to welcome our guest, Scott Foster. Scott is the Managing Director of Alvarez Marsal. Scott, thank you for joining us and welcome.
Thanks, Mario. Appreciate it.
Scott, you focus on transaction diligence. Well, frankly, you do a lot of things. So I'm going to kind of start by talking a little bit about you and then a little bit of Alvarez Marsal, a little bit about the work you do.
I'll kick it off. Sure. Yeah. I began my career as an auditor a long time ago, moved into the transaction services business at Deloitte in 2000. So I've been doing due diligence work for over 25 years. I spent a few years doing that, moved to a client, which was a public company in a corporate development role, learned a lot in that role, being on the other side and getting a little bit more, my hands a little dirtier on the operations side. Missed the professional services world and came back and sort of developed my career from, the 2005 to 2008 in that crazy M&A cycle. Made partner June of 2008, just before the crash. So started my time as a partner in a tough time, but spent my time focused on building relationships, building my brand. It ended up being a good use of my time and moved up and led the practice there. Spent a number of years doing that. Moved over to another firm. In 2022, decided it was time for a change and took some time off to figure out what that was, and ended up settling in on moving over to A&M and building out their M&A practice, which I started in 2023.
Scott, maybe tell us a little bit about that practice here in Canada for A&M, because it's really come a long way in a short time.
Yeah, A&M goes back 40 years. It was started by Brian and Tony, the founders still lead the business. It's a firm that's owned by its managing directors globally. There's no outside capital. It's grown tremendously over the last 20 years, where our transaction advisory group was started. We're coming up on our 20th anniversary as a global practice. And Canada was one of sort of the missing markets for that business, which has big operation in the US and Europe, Asia, Latin America. And so I was asked to come on and build out our Canadian practice. My experience going back was financial due diligence, but also had done some commercial diligence. When they asked me to come on, my perspective was we needed to build an integrated service offering to serve both private equity and corporate clients in Canada. And so the mandate was to build a financial diligence, commercial due diligence, operations, IT, and tax. And so in less than 3 years, we found tax leaders that have come on and built a great M&A tax business. The combined tax and transaction advisory group is over 65 people, including 10 managing directors. And we have a full suite integrated due diligence offering in Canada. We lean on our global colleagues for support on industry and functional expertise and technical expertise to bring to our Canadian clients. But for the most part, we're sort of a self-sufficient integrated due diligence practice in Canada.
Can I ask you, you've been doing transaction business a long time. We're in a strange market with all these kind of, macro forces. Have you seen any differences, any changes in transaction diligences in the last 12, 24 months with all that's going on with the tariffs, with the economy the way it is? Have you noticed any changes in transaction diligence?
Yeah, I think our Canadian clients were quite tentative for the first half of the year. So a lot of the processes were really dragged out. Our work was sort of put into different phases, really focused on dealing with key red flags early in processes. And a lot of clients kicked a lot of tires, but really didn't get engaged in a big way on transactions. So that's more from a market perspective. As far as how we do our work, a really big focus on value creation post-deal. And so people investing time in understanding what is the growth plan, how can they build a business meaningfully going forward, particularly our private equity clients, but even our corporate clients. That is a really big focus early stage in our work. And so in some cases, it's changed the cadence of the work that we do, as well as the level of effort in certain parts of our diligence.
Can I ask you, Scott, when we look at transaction diligence today, you talked about the, value creation as being something that is newer. We didn't do it years ago, but we're doing a lot more of it. Are you seeing other elements of diligence the clients are spending more time on now than you would say years ago? They didn't focus on it before, but it's become a priority now, or at least more of a priority.
Yeah, our commercial diligence team, absolutely. We have 12 people on our team that just do commercial diligence. And so for a lot of clients, even in that area, a lot of our time in the past was trying to understand competitors and customers. More and more now, our focus is growth and sort of how is this company going to double, triple, or more their EBITDA. And so on recent transactions, the bulk of our time was really focused on that aspect. So that's something that's fairly new. It was always part of the scope, but it was often maybe an afterthought or the last part of it. Many times now we're starting with that as a functional piece of our work.
That's part of an M&A process. As part of, let's say, Q of E. It becomes part of the, it's part of a Q of E mandate, but it's broader than just a Q of E's. Is what
that integrated piece where it's like, our commercial diligence team often will even start before the Q of E, and they want to validate, can we grow this from 10 million at EBITDA to 25 in the next 4 or 5 years? And so that's the critical question for many clients. In other cases, so sometimes that's revenue and growth focused. So it could be M&A, it could be organic growth, it could be new service lines, could be geographic expansion. So those are the types of questions we're trying to answer for clients. The other piece is, what are the levers that they can pull to drive better efficiencies in the business, and whether it's cost takeout, eliminating facilities. So we're doing operational due diligence in more instances as well, and helping clients figure out, one, are there any risks? But often it's more focused on help us build our value creation plan. So identify the areas, the levers that we can pull. And it's not always cost. More and more it is about how do we drive better efficiency in our sales organization? How do we get more from what we currently have? So we love those opportunities where we can really roll up our sleeves and help our clients understand the business better and help them build that plan.
One of the things I've noticed, and I want to get your thoughts on it, because I'm sure it plays out for you, is people are taking more time to do diligence. It's funny. We went from the speedy 21, 22, where, they want it overnight, to almost now purposefully almost slowing down diligence, looking for visibility into the next quarter. Are you seeing that on your end? And I mean, how does that affect your work as you kind of basically almost have to stretch out diligence purposefully to give people more visibility to where companies go?
Absolutely. We've got projects that we started in 2023 that have recently closed. So very long, and we had several that were manufacturing and distribution businesses that were close to completing in early 25 that are still sort of in limbo. So absolutely. And I think in some cases that provides an opportunity to do those areas of diligence that take a little bit longer, looking at growth opportunities, building those value creation plans. Yeah, in 2021, you're trying to get a deal done in 60 days, 30 days from start to finish. Really difficult to build those types of plans. And so in some cases it's good for us in that we have the time. And that's where I was getting at. We're often staging our work significantly with clients where let's do red flags, identify any risks that would make us walk away from this. And people want to see sustained performance as well. So if a business is performing well in Q1, they want to see that it continues in Q2. So we do a lot of roll forwards of our work on the Q of E side, where whether we're on the sell side or the buy side, really making sure that the business continues to perform and the items that they've identified as growth areas are legitimate and the numbers showing.
There's the tariffs, there's some of this kind of trade issues there. Does that affect your work? Is that part of your practice to kind of dig into some of that, or how do you dig in on that when you're asked to evaluate that more closely? So,
yeah, it definitely impacted the business as far as people being, I think, the uncertainty created a lot of what you discussed, the challenges early in the year. We'll dig in and understand how it's impacted businesses. To be honest, a lot of the transactions that we've seen lately, people have tried to avoid businesses with much exposure. We've seen the healthcare sector, software and technology, industrial businesses that are very service oriented, infrastructure that's domestic focused. So those traditional distribution businesses that are cross-border or manufacturing processing businesses, the activity in those sectors have slowed down. But we do see them. We try to ring fence the risk, the issues, quantify the exposure. In many cases, in some cases, we're starting to see the implications on inflation in cost in businesses. And so trying to assess whether that can be passed through, what the company's doing to try to deal with those challenges. The other one we've seen is companies, front loaded shipping a lot of product to clients, and, did they front load the first half of 2025 and their second half numbers are going to be poor to try to get around tariffs. So those types of things we're trying to assess as we work through different projects.
But I want to ask you, I mean, obviously AI is affecting all of us in terms of its influence. Are you, and I can ask you two questions if I could. One is the impact you're seeing in terms of the work that you do. And then two is the impact that it has on, generally speaking, transaction diligence, if I could ask you, because I know people sometimes say that AI is going to replace us all, and transaction diligence as well as places. I think people try to say that the future of transaction diligence will be all AI. I want to get your thoughts. I mean, in terms of your own work, how do you deal with AI in terms of understanding the work that you do, in terms of seeing it in its use in companies and the impact that it has?
It's early stage. We're trying to use it. We are using it to be more efficient, more effective in our work on some of the parts of the business that are lower value add for our clients. We see clients using it in their business. And so sometimes it's trying to quantify the impact it's had. Often they're trying to show how they're driving efficiencies in their own business and improving their performance. So trying to quantify that. And again, assessing how sustainable that is. As far as looking forward, what we do as a firm, we have a little bit of a different model. We're a more senior practitioner focused and bringing experience, industry expertise, functional expertise. We don't have a lot of junior people. And we think that will continue to be a winning formula during AI as that gets embraced. I think a lot of the repetitive sort of lower value parts of our business will be taken away, but there's still going to be a need for people to advise, bring experience, bring insights. And that's been part of what we've done. Our 20 years as a tag practice and 40 years as a firm, very much our heritage is people with deep expertise and experience that are bringing it to our clients. So we think that will continue to be in demand from our clients.
Don, I always ask our guests to tell us a little bit, kind of call it the crystal ball question, where they see the market going, where the trends that they're seeing. When you look at your work and you see where the market's going, where you touched upon in some of the sectors or industries that are obviously you're seeing a lot of, but with respect to your work, where are you seeing any trends, seeing anything we should look out for, any opportunities or market dynamics that you think are wrong?
I've been telling my team for 2 years that it's coming, this big wave is coming, and I've been wrong. So I've stopped being much of a prognosticator, but I think there's still all the macro themes have existed for the last 2 years with a tremendous amount of capital available to deploy. There's still the demographic issues with aging founders and businesses. There's a lot of private equity groups that need to exit. There's a lot of corporates that are contemplating ways to drive shareholder value, which will likely, more take privates, carve outs, things like that. So a lot of those trends I'm quite excited about. I do worry about inflation in both the US and Canada stalling the economy. And so that could be something that, in the second half of this year and going into next year, will that be the biggest driver? We're seeing really strong activity right now, and we hope it continues. There's just, I'm trying not to get too bullish, given how wrong I've been for the last 2 years.
Scott, we talked a little bit earlier about the industries you're seeing deals in. I know you got a lot of broad industries. Any particular industries you see we should keep an eye out for in terms of deal activity? And you had mentioned already some of them. I want to kind of focus on that.
Across North America, our software and technology, healthcare, financial services practices have been our busiest. Partially, they've had less impact from some of the disruption over the last sort of half year. But I think a lot of those fundamentals in Canada are in play. We just did a great transaction for a client. It was a carve out, an integration project. And so it's still ongoing, but we love, that was in the software and technology space. And we think that will continue to be, a hot area. And we've got, folks that have got deep industry experience there that we rely on to help us bring something, a differentiated approach to our clients. Healthcare has continued to be strong. We've got corporates and private equity clients that are active in that space. So I think those are areas that we're quite excited about. It fits well with our strengths. I think the other area is infrastructure. Certain parts of that have had some challenges, but we continue to see Canadian pension plans, infrastructure funds be quite active in that space. And we've seen some large transactions in the Canadian market and think that will continue. So we're quite excited about the opportunities in that space.
I want to thank you for joining us. Obviously, an opportunity to learn about your practice, learn about the growth of Alvarez Marsal in Canada, and appreciate you telling us a little bit more about your work and what you're seeing in the market.
Thanks, Barry. I appreciate it.
Thank you for tuning into Views from the Market. Stay updated with the latest episodes by subscribing wherever you find your podcasts or visiting Stikeman.com/Views from the Market.